So often I get questions from traders, they ask me, Rainer, how do I improve my risk to reward? Rainer, I'm always getting stopped out of my trades, right? Is there anything I can do to better time the markets? So this is what you're going to learn in today's video post, right? You'll learn how to improve your risk to reward and increase your winning rate. My name is Rainer, founder of Trading with Rainer, and welcome to today's video post. Okay, so look at this chart. This is the chart of Aussie dollar daily time frame, but it doesn't matter what markets you're trading or what time frame you're trading. The principles are essentially the same throughout. So that's it. Look at this chart, and let me walk you through a thought process of someone who is new to trading, what he'll think of, right? He would say, okay, this is a downtrend, Rainer, right? So in the downtrend, I'm looking to short. So where would I look to short? Let me see. Oh, look at this bar, right? So bearish. I'm going short right now in case I miss a move. So what they do is they go short over here. So let this be the level they went short. Let's put it as a a green line, right? This green line here is where they went short. Then where would I put my stop loss? So they ask themselves, and they say, okay, the textbook says put your stop loss above the high of resistance, which is over here. So they put their stop loss over here, which is in red color. And then the next question, right? Where would I look to take my profits? Okay, I'll look to take my profits near the swing low over here, and let's put it in black. So you can see over here, right? The green is where they got short, red is their stop loss, black is where they looking to take their profits. So in terms of risk to reward, they are basically risking about 330 pips to make 220 pips. So you're risking 320 pips to make 220. So let's see, right? 320, you're risking 330. And your reward is potentially 220. So what is your risk to reward? Very simple, right? Your risk to reward on this trade is for every dollar you're risking, you are looking to make 67 cents. Just a very simple mathematical calculation, right? You just take 220 divide by 330, you get this 0.67. So for every dollar you risk, you are looking to make 67 cents. So can you do better than this? Well, I'm sure you can, right? So how can you do better than this? So this is what today's video is all about. So let me share with you, right? And give you something to think about on how to actually, improve your risk to reward. And at the same time, improve your winning rate, right? Let's see what are the two problems you have right now, right? The first problem is this. You are putting your stop loss at this resistance over here, just above the high of resistance. And there is let me explain to you. Let me tell you that there is a good chance price is going to come out into this area of resistance, triggering your stops, and then it trades lower once again. So that's the first problem. The second problem is, well, it's not really so much of a problem, but clearly you understand that your risk to reward is not too favorable, right? Because you're risking this much. This is your risk, right? This is your risk. And this is your reward, right? So it's not really too favorable, but again, it can be sustainable in the long run if you have a high winning rate. But again, in this video, we are trying to, improve our risk to reward. So let's understand how we can do this, and as well, to give you a better stop loss placement. So that's it, right? The first thing to understand is, let's get rid of the lines. Right? The first thing to understand is that this over here, this area of resistance, is where there are potential sellers coming in that will push price lower, right? There is a possibility of this happening. So it makes sense to be looking for trades if it were to come into this area of resistance, because there is a potential sellers or potential selling pressure that would actually push price lower. There is no guarantee, but there is this scenario. So let's say you see what happened is that price then traded higher. So let's say at this point in time, right, you are not someone who is too impatient. You gladly wait for price to come to your level. So you queue at this level over here, right? Let's say you go short at market over here. Say let's put it in green color once again. And stop loss wise, right, you understand that it's not a wise thing to do to put your stop loss just above the high of resistance, because as I've shared with you earlier, right, price could just trigger the cluster of stops above the highs and then trade lower. So you're smarter than that. So what you do is instead you give yourself some buffer and you put your stop loss, say, somewhere here. Right, let's put it in red. And your profit target is still the same, right? Say this one over here, this black line. So now, how much are you risking? Right, what is your risk to reward on this trade? in this scenario, you're risking about 170 pips to make 440 pips. So in terms of risk to reward, let me get out my calculator. Okay, in terms of risk to reward, right, you're risking 170 pips. Right, this is your risk, and your reward is about 440. Right, this is your reward. So if you compare it in terms for dollar, you're risking $1 to make about $2.58. But let's round it off to $2.60. All right. So risking $1 to make $2.60. So can you see how your risk to reward dynamics have changed right now? By being patient with yourself, right? By being patient and letting the price come to your desired area where you want to trade from. And on top of it, you have a better stop loss placement as well, right? You manage to give yourself more buffer, right? You're no longer putting your stop loss just above this height. You have given yourself some buffer and put your stop loss at this current level over here. So what price can do is that it may, trade higher, create a spike down. You will still be in this trade. So this one simple technique, right, of letting price come to your desired area has improved your risk to reward. Number one is improve your risk to reward, and it has improved your winning rate because you will not get stopped out so easily, right? You also improve your winning rate just by one simple technique of letting price come to you. All right. So let me share with you one more example before we conclude today's lesson. All right. Let's look at the Euro Pound. Again, right? A new trader will look at this chart and say, "Oh, Rainer, it's an uptrend. I'll be looking to long." Right? So fair enough, right? I myself will be looking to long as well. And then they see this candle over here. Oh man, price is leaving without me. Wait for me. So what they do? They quickly go on board the trade, market buy order, right? Over here. They go long here in green. Where's their stop loss? Okay, textbook say put your stop loss below the low of support, which is over here in red. And where would they look to take their profits? Okay, look to take profits at the swing high, which is this black one over here. Fair enough. So what is their risk to reward in this scenario? Well, from the looks of it, right, it's about you're risking about $1 to make $1, about 1-to-1 risk to reward. And now the question is, can you improve on this? Right? Can you improve on this? Sure you can, right? Here's how you can do about it, right? Remember, right, what I said earlier, let price come to you. So instead of, chasing price, instead of, entering a trade only when, price has already made a substantial move, instead, wait for price to come to your desired level. So where is your desired level in this chart, on this chart? Well, it's an uptrend, and in an uptrend, right? And area of support is a potential area where there will be buying pressure, right? There are potential buying pressure in this area of support. So it makes sense, right, for you to get long on this trade closer to this area of support. So what you can do is you can see what happened next, right? If you go long over here, probably you get stopped out on this spike down over here. So in this instance, you see, right, price is now at your desired area to trade from, at an area of support. And again, you know that putting a stop loss just below the low of support is not really too advisable because you can get stopped out like this over here, a spike down, taking out the stop loss below this low and this low. So what you can do instead is to just push, I would say, give yourself some more buffer and put your stop loss perhaps somewhere here, so you don't get stopped up on the false breakout, right? So this is one. So now look at it, right? You have a tighter entry and your stop loss is giving you more buffer. What is your risk to reward in this instance? Well, you are risking this much now. You're risking 70 pips to make 190 pips. So in terms of risk to reward, you're risking about $1 to make about $2.80. And now you have improved your risk to reward, right? All by just being patient, by letting price come to your desired level. And this is how you improve your risk to reward, and this is how you actually improve your winning rate, because you're no longer putting your stop loss at obvious location where the other traders are doing. You're giving yourself more buffer, and this is your buffer in this instance, all right? If let's look at this chart. If price were to get you long and it trade lower over here, chances are this is a breakout. Chances are the support is not holding, and it will be better to get out the trade. But again, at least you've given yourself more buffer in this instance, compared to a trader who put their stop loss over here just below the low of support, just below here. Chances are, right, it is much more likely to get triggered by putting your stop loss just below the low of support. So that's it, right? This one simple technique gives you a better risk to reward and improve your winning rate. Okay? So with that, let's do a recap, right? The entire message in today's lesson is this. Number one, let price come to you. Right? This is the message, right? Let price come to you, right? Do not chase price, because when you let price come to you to your desired levels, right, support or resistance, you are trading at a favorable location, and at the same time you can actually give yourself more buffer on the trade, right? Your stop loss could be a certain distance away from support and resistance, compared to the other traders who just put their stop loss at these levels and then get stopped out, over and over again. So the key message is, let price come to you so you can actually trade from favorable location, which in turn, number one, give you a favorable risk to reward, and number two, right, improve your winning rate, because you are no longer putting your stop loss at those obvious levels. Okay, so with that said, I hope you find today's lesson useful. If you have any comments, any feedback, feel free to let me know in the comment section below. With that, I wish you good luck and good trading. Talk to you soon.